Hi there. So we're in the last week of March, and for that matter, last part of the quarter as well as for that fiscal. Now, how did Nifty perform during this week? Effectively speaking, it was fairly in the consolidated zone, and in fact, it ended 1.04% up, which is 22,327. We saw advances 39 and declines of 11. FIIs bought for 2,368 crores and DIs bought for 8,912 crores. So enough buying from both foreign institutions as well as domestic investors. Uh, Now, before we proceed with the rest of the sequence, just to give you a quick idea of what we cover in this weekly bulletin, is primarily we look at how is the Nifty performed, how is it expected to perform in the coming week, and at the same time, what are the macroeconomic trends that are shaping up. And we also cover a quote from one of the famous investors uh, to understand the psyche of what it takes to be a prudent investor in the stock market. So today we have got Warren Buffett, and his one of the quotes that we picked up is, "Beware the investment activity that produces applause. The great moves are usually greeted by yawns." What effectively means to say is that mostly investments which are simple to understand and sometimes they're very obvious, people think of them as very average investments, because if you have cracked it, then people feel there's nothing in it. So be aware of the fact when you're trying to talk about rocket science, that means there is something wrong or it's too complicated and you're trying to build it up. But if you have been able to simplify it, then maybe it's the right thing. That's what he intends to say. And primarily, if you look at his lifestyle, it clearly reflects that he tries to simplify everything. And when he tries to simplify everything, if you just look at him as another person, then you might not find anything interesting. Just because he's Warren Buffett, everybody listens to him. But if you really look at his lifestyle and investment policy also at the same time, just read the balance sheet, understand it to the last level of detail, and if it makes sense, then invest for a long term. That's as simple as it can get, but it's finally goes through all the complexity. That's what he tries to say. So that is Warren Buffett. Now coming back to what's happening at the Nifty in terms of the sectors, media continues to be under the downtrend, primarily because of the Z and the Sony merger call off. It was down by 2.92%. Infra and realty continue to show a very strong positive trend, finally back from the woods for this week at 2.33 and 2.99%. Rest of the indices more or less continue to be in tune with the Nifty and trade in the same zones. Now, the news in focus, Maruti, which has been not participating in the bull run for the first time, really started running like a horse, and it went up by 3% to hit a new record high. And probably there is hope now beyond just being there in the market. And the realty sector, as I mentioned earlier, it shows a very strong uptrend. And if you really look at it, during this year itself, the realty index has grown by 130%. So it clearly reflects that the party might just continue, and it is definitely given a lot of good run up during this year. Now, what we're covering next, we're going to look at some of the macroeconomic trends which are going to affect Nifty in the upcoming months. One is primarily the Lok Sabha election results. We're going to look at how stock markets have performed under Modi government and what is our hypothesis depending upon how many seats BJP gets. Then what is the expected FIIs inflows, because that is definitely impacts the stock markets. And of course, as we talked about earlier, the GDP is the primary driver for the stock market, and the primary part of at least the middle class consumption comes from the job market. What is the job market telling us as on date? So let's get into the Lok Sabha part of it. Let's look at numbers from the perspective of how things have been under BJP or the Modi government starting from 2014, when Modi ji came to the market, or for that matter the system. If you look at it, we've got the average P's for all the years, and if you really look at it, the average for the market has been somewhere in between 20 and the highest being 30, which was in 2021, just after the COVID, or the year in which the COVID was really bad, and the impact of 2020 COVID came, effectively speaking, in 2021 results. So that is why it traded very, very high. So that's what it is. Then if you really look at it from a min perspective, what we're seeing over here is the fact that most of the times the markets have touched 20, but sometimes it has also gone down all the way to 17. So 17 was there in 2014 as well as 2020. Of course, 2020 there was a very strong reason for it to go down. And from a max perspective, Nifty has also traded sometimes at 38.45, which was again when the markets recovered from the COVID times, and although results had not improved, but the market built up an euphoria. So it went all the way up to the P valuations of 38.45. Today the market is trading somewhere around 23 as on date, and so it's not way above its average. The average has been somewhere around 21.5 and today it is at 23. So it's not like overvalued at this point in time, but it is close to the zone in which it can become overvalued if it goes up by another 5 to 10%. So that's how the markets have been under Modi government. Now let's look at what is our hypothesis saying from a valuations perspective, depending upon what the Lok Sabha election results say. So our hypothesis says that if there is one is of course that if in 2014 the markets gave a return of 31.3%, that's the first time when Modi government came, and 12% in 2019, which have been the election years. So, and this year the markets have been mostly in consolidation phase and it has given 2.74% so far. And if Modi government comes with an overwhelming majority, then we can expect a 12 to 15% upside. So today the P is in the range of around 22, 23. It will go up till 25, 26 for that matter, not 24, 25, a little above the percentage that we are talking about. So it will go up till 25, 26. That is the range in which it will operate. So it will give you an upside of maybe 12 to 15%. But if BJP doesn't perform well, and what does BJP doesn't perform well, that it secures less than its current number, that is 291, then we can see a dip of at least 10 to 15%, and the markets might trade in the zone of 19 to 20 P, which is effectively speaking, we're saying that it will see somewhere around 19,500 to 20,000, assuming BJP government is definitely able to stake claim on Modi being the Prime Minister. So that's our hypothesis, and of course the market will definitely touch its range during 2024. Today it is trading just above the average valuations. That's our hypothesis at this point in time. So continuing, if we look at the FII's inflows, how the inflows have been, the general trend has been that and over here if you look at it, the red one indicates the debt when FIIs have invested in the debt, and the blue one indicates the cash or the equity market investments. Whenever there has been debt investment, there is a clear pattern that the markets have not performed that well, and when there is a pattern which indicates that there is a cash investment, then the markets do indicate a positive trend after it has made that investment. So effectively speaking, for most part of it, what we are saying is that in the current situation, what we are seeing is that the FIIs are making more investments in the debt. So we need to be careful about it. That's the hypothesis. And so far, when we have seen that there was enough investment in the equity, there is 19% return over here. When there is more in the equity again over here, there is positivity in the returns. So it is primarily showing that if these bars are somewhere indicative, then whenever there is more that is flowing into the blue bar, there is better returns. So currently what we are seeing is that the blue bar is not showing that positive trend at this point in time. But yes, we still believe that the markets will continue to trade in a consolidation phase. If this trend goes up, then there is a lot of expectation that FIs will pump in a lot of money, and the Nifty can definitely touch beyond 26 also in this year. But if these blue bars don't change, then yeah, 24, 25 is what's the higher ranges. And now coming to the last part of it, which so just a quick summary that we've already talked about. The key point being, as I mentioned, FIs are investing much more in debt than equity as on date in 2024. So we just need to be cautious with our investments right now. So that's what the FIs market was. And now the last part of the video or the episode, that okay, if the job market, how is the job market looking? FIs data is indicating that there is more focus on the debt. And of course, the political scenario does indicate that there will be stability, but yes, it all depends upon what are the final results. In terms of the job market, it's not looking really good. If you look at one of the indicators from the job market perspective, apart from the news that we keep getting about IT companies laying off employees, in the job market, primarily if you look at how the placement season has been at IIMs, then general tone is negative. And IIM Lucknow has been very, very clear, and in fact, for that matter, there is also news that IIM Ahmedabad could not get 100% placement. IIM Lucknow has published a number indicating that the median salary has declined. So that's what it is. Generally, the trend is not very positive from a job market perspective. So what our recommendation at this point in time is that stay invested, don't take very long bets at this point in time. Markets will give you an opportunity in 2024, but what is important is that when the market gives an opportunity, you should have the courage to make an investment, and you should have the cash to make that investment. So if you have cash today, park it in the debt, and when the opportunity presents, which might be 21, 22 of P, today it is 23, almost 23, so approximately 10% down from where it is today, you can invest in Nifty. And of course, if you're playing stock specific and you understand that well, then go ahead and make investments. Hopefully this week, as we start the new fiscal, will remain positive, and Nifty, our opinion, will remain in the consolidation zone in between 22,200 to 22,500. So I'll see you in the next one, wherein we cover more details, and we are also looking to analyze more on the GDP data, which we will release as a video. Stay invested prudently. Check out the numbers. I'll see you in the next one. Bye for now.